This episode is sponsored by Lupton Capital, which provides a variety of investment services to both retail and institutional investors on platforms such as Seeking Alpha, Substack, and StockTwits. For more information on these services or for links to those services, please visit luptoncapital.com. Hey, everybody. Welcome back to the Investing with the Whales podcast. I'm here today with my good friend Muji. Muji, he writes a blog at HHHyperGrowth. I believe the website is hypergrowth.com. That's hypergrowth with 3 H's. I know he's been traveling for the last couple of weeks, but we finally found some time to do this together. So, Muji, welcome to the show.
Thank you, sir. Great to see you again.
So I've not seen you since the FinTwit conference last year in Vegas. That was a good time. Talk to us about what is your investment strategy, and then we'll kind of dive into some individual names, some themes like AI, but how do you run your own portfolio?
I am a very tech-driven investor. Clearly, the name of my blog and premium service is HyperGrowth. I'm looking for companies that are exploding in growth and that show the right profitability trends and profile for a company that I think can scale. And so, thus far, it's been a lot of cloud names, software names, because I feel like the cloud really unlocks the potential to scale. And so I've been in and around data and analytics, DevOps, which is the creation of apps and app stacks, observability of those app stacks, security of those app stacks, next-gen security and networking security, and edge networks have been kind of the basic themes. And now all of that is pivoting into AI and ML from here, machine learning.
And what are some of the names that you've been the most excited about for the last couple of years and are still excited about today? I know Snowflake's one.
Yeah, Snowflake as a data lakehouse. Databricks is a private company that is kind of side by side with them in terms of interest. But Datadog, Cloudflare, CrowdStrike, Zscaler have all been names that I've followed. Confluent I've owned on and off, and have kind of followed along with GitLab, Samsara as an IoT play, and other kind of software platforms in that vein.
Do you do anything with do you follow the mega caps at all? The Microsofts, Googles? Those are kind of like the two big cloud AI names that come to mind, right? Google, Microsoft,
Amazon,
yep, AWS.
Big three hyperscalers right there. I don't follow their companies except for the cloud portion.
Okay.
I find it very interesting to see, to kind of extrapolate how the success of the clouds are. They all have earnings announcements on the same week. I like to call it Cloud Week.
Next week, I think it's next week too, right?
Oh, there you go. Yeah, it's coming up. It's pretty early in the earnings cycle, so yes. And so, that kind of sets the trend for demand of these more independent software vendors that are built atop those clouds. So I definitely follow the clouds, as well as where they're positioning in these same industries. Where are they going in data and analytics? Where are they going in AI? Where are they going in the DevOps tools that you build alongside of these app stacks? I want to see how they're competing against the companies I do own, but I don't own them per se because they're all based on a different business, whether it's e-commerce, enterprise, tooling, search. They've all got their cash cow that then they've bolted on these cloud services on top of.
Now, I assume one of the reasons you like Snowflake, Datadog, et cetera, is because they're neutral, right? They work with all of the large hyperscalers, AWS, Google Cloud, and Azure.
Precisely. And I think that's a differentiator for those platforms, is that cloud neutral take, in that regardless of where my business decides to put its cloud assets, and that may be in one cloud, it may be spread out in multi-cloud, hybrid, partially on-premise, partially in cloud. Any combination of that, these other software platforms are applicable to. Snowflake can live across all of those. Datadog can live across all of those and even help you manage assets as you migrate from one to another. And so these tools really do exist at a level above them. I see the cloud as kind of being commoditized in at least the raw infrastructure. And so, I do watch for where they're positioning themselves competitively. You go back several years ago, the clouds were very hostile to the platforms that were being built on them, especially the ones that were open source based, because they take that open source tool like MongoDB, like Elasticsearch, and build their own service around it, and really, kind of elbow out the other services. Amazon was one of the first to really change that stance and work more side by side with the ISVs, because they realized how much money they were making off them for very little effort. And so, they still battle because, they could be offering higher margin software platforms atop that replicate what some of these partners do, but they've really started to embrace their partners. And so you've seen a drastic change in how MongoDB, how Elasticsearch, Confluent, these open source based companies, and I include private company Databricks in that, are really starting to work with the hyperscalers and be a very vital partner to them. And so there's been a drastic change in that hostility that you've had a couple of years back that could have been detrimental to these companies. And, you look at the success over MongoDB, over Confluent over a number of years, and clearly that change in posture with Amazon has greatly improved their prospects.
So I know AWS is still the largest. Is Azure second? And then Google Cloud is third? Okay.
Azure is second, although
Azure. I always say Azure, yeah.
There's a little bit of a bombshell lately in that some deposition notes came out from a year ago that showed that that these companies obscure the totals and only provide some of the growth rates around these around their cloud segment, and so that we never had the running total of what revenue Azure was bringing in, and it actually turned out to be lower than consensus expectations in these court documents that got released. So Azure is second place, Google is third.
But AWS is still the 800-pound gorilla in that business. So let's talk about AI. I mean, AI was a theme coming into 2023, but it certainly took on a whole new life thanks to NVIDIA and their Q1 earnings, where they raised their Q2 revenue guidance from like 7 billion to 11 billion. And I feel like that just really sparked all of these AI stocks and discussions around AI. So what are your thoughts on AI? What are going to be some of the winners? I mean, me and you talked before we started recording, and the mega caps are a big part of the story, right? Google, Microsoft. Today, Microsoft launched or announced their $30 subscription, to get access to AI tools. But outside of mega cap tech, what are some of your favorite AI stocks? Sorry, that was like 3 different questions.
It was. Let's see. It's exciting. You're absolutely right. NVIDIA, surprised everyone with a 50% sequential gain in their upcoming guide. And so clearly signaled that demand is it peaked right off the bat. You can actually go back a little bit to November with the release of ChatGPT from OpenAI, which has had a long time partnership with Microsoft. And that really, the way I like to look at it is it really made the advancements in AI public facing. And so I deal with a lot of enterprise software where they're building platforms that aren't so intuitive to, regular users, and certainly not the general investing public. And so, versus something like Netflix, you can go and try out Hulu, CarMax. You can go try these services out and see if these companies are appealing to you. But nobody knows really what Datadog does, Zscaler does, unless you're an actual client of that company. So AI became very public with the release of ChatGPT, and suddenly the populace could see how much the software had advanced, how much the hardware had advanced. And then there were really some novel studies and research over the past few years that have greatly advanced the capabilities of these large language models. And so suddenly AI communicates with us. We can communicate with it, and it can communicate with us. But it's just another layer atop other things that are coming: robotics, autonomous driving. There's other advancements yet to come, but it's now a communication layer. And so everyone's racing out to adopt these communication layers. And for me, I'm a little bit hesitant to, rush in and be investing just with AI because of how defensive I feel like it's going to become. Every company has to suddenly adopt generative AI features just to remain on par with the expectations of their current customer base. You have to have a better in-product search. You can start adding assistive chatbots that will help you through how to work with the platform you're on and improve the user interface of that platform, much less the content generation, the image generation, and all the other capabilities we've seen. So for me, it's very defensive. Absolutely, the first tier of impact is NVIDIA, the hardware layer, the infrastructure behind this. And then I'd include the clouds on top of that, and not just the main three clouds, but there's other clouds emerging that are startups that are providing GPUs. But GPUs are clearly scarce right now. There's a lot of shopping. If you're creating these models, you need to shop between the different clouds in order to find these GPUs, much less, the difficulty in buying them yourself. So there is a big boost, I think, to the clouds that are starting to provide or really unlock what they've already been building in AI services. You think in the past, when someone created AI or machine learning models, it's a very do-it-yourself process. You have to kind of corral all the data. You have to enrich it and clean it up. You have to experiment with models to it's all probability based. So you're creating models to predict or forecast some outcome or score some level of risk. And so it's a very iterative experimental process, a lot different than software development in general. So you've had all these platforms in the past emerge, Databricks, Alteryx, in order to do the lifespan of machine learning for a data science, what's called ML ops. What you have now with this emergence of LLMs and generative AI is they already pre-built a lot of knowledge into those AIs about language based on the public internet. And so now you can take those large language models, and they're being provided as third-party services like OpenAI, Anthropic. The clouds themselves are providing them. Google has Bard. Underlying that is its Palm AIs. AWS has created a Bedrock service with its Titan generative AI or LLM models. They're all starting to provide these LLM models and provide you guardrails around it so that I, as a company, can go in and have the security and governance guardrails to assure that my data that I'm trying to use within this large language model isn't being used in that large language model to learn and adapt and give answers to other people. So you want your enterprise data to stay within your enterprise. So what all of these hyperscalers are now building is the ability to use LLMs and fine tune them with your personal enterprise data, not personal data, your enterprise data, and allow it to make decisions about your enterprise. Where should we take sales next? There's the lower level stuff of just augmentation of skills. Help me write this email, help me write this content, this pitch deck, whatever. But it can be analyzing all this data and really, I've always been very interested from an investment standpoint in data-driven organizations, data really being at the core of enterprise and really making strategic decisions based on that data. AI is going to be able to unlock that for a lot of companies much easier than if they had to hand build these models themselves with those machine learning platforms. It's being, to put a fine word on it, it's being dumbed down. So I, as an enterprise user, can simply pull my enterprise data in, and it can help make decisions. I can pull all that old marketing copy in, and it can be generating new marketing copy. But not only that, I can be pulling my entire data warehouse in, and it could be making strategic decisions about where the business goes next, what, how to improve sales, etc. So the clouds are really unlocking that, and then a whole host of other startups are emerging around that. I think the impacts to individual companies that I'm interested in, I still am very interested in data and analytics companies, DevOps companies, and observability, because I think of all of the apps now being created, it's just really propelling that whole app economy, API economy that has really driven the past couple of years of success in my areas of interest. I think it's just going to propel it going forward. You're unlocking more and more apps. Data, as we already knew, is the new oil. Now it's even more so. I think people have finally come to the realization that data is everything. And so everybody's amassing their data. They're trying to centralize it. They're trying to clean it. So I'm really looking to some immediate kind of next tier level impacts to Snowflake. It's already a central repository of data. A lot of other companies, Samsara, that's an IoT based platform. It's got a huge pool of data. It can start applying AI over that and be making more, allowing its customers to make better and better decisions and more automated processes.
So, I follow most of these companies. I own a couple of them myself. They're not cheap companies, but they are growing faster than the overall market. If you look out at estimates over the next few years, do you think there's a good chance that these companies beat those estimates because of the impact of AI? What that might do to their underlying business?
Yes, I do. I think absolutely it's going to drive more and more data use for sure. So, anything that is around the collection of data, centralizing it all in one place, the transmission of data. I think Confluence got a big tailwind here. MongoDB as a giant operational database store. Snowflake as a giant data warehouse store that has all this kind of aggregated and cleaned up business data in it.
And then protecting the data, right? With cybersecurity.
Exactly. It all spins out from there. You've got all of the things to manage these app stacks, monitor them, and secure them atop of it. So that's why I'm still interested in Datadog, still interested in a lot of the security companies around networking security and edge networks, which are about the interconnection of all these remote environments and locations.
So 3 years ago, there was a hot debate on FinTwit between Cloudflare and Fastly. Who would be the winner? And I think if we look back, it's pretty obvious that Cloudflare was the winner. Fastly sort of fell apart, and part of that was they lost TikTok, or I think they lost TikTok. I'm not even sure. Company couldn't become profitable. New CEO. Do you follow Fastly anymore? I certainly haven't in 3 years, although I'm tempted to jump back in and see if I missed anything. But do you still follow them at all?
Boy, yeah, it was down to about $1 billion in market cap there for a while, after hitting, I want to say 25 billion
Jesus.
At one point when it was kind of head to head with Cloudflare. I haven't followed them because I saw a lot of missteps in that Cloudflare versus Fastly debate. They eventually got a new CEO, which was incredibly strongly needed. I just don't like the managerial setup of that company. Is that the CEO isn't really the one in control. It's his underling, the chief architect, is also the chairman of the board. And so he's, his boss is also his underling. And so he's really got no say. The CEO has no say in the actual strategic positioning of how they're building their architecture and where it's going. So a lot of missteps, and you could see it in the finances where they were really white glove service, where they really had to handhold their users. And so the land portion of land and expand was extremely tiny. And they just really never quite lived up to the potential of what an edge network could be.
It also seemed like Cloudflare was innovating faster, launching new products and services faster. And Fastly was, I don't know, they were just kind of happy with what they had.
Precisely. Absolutely. Cloudflare is an innovation machine. The product, what eventually caught up to them this year is the sales execution started to falter because they had to change their go-to-market motion. They were exclusively bottom-up motion where web operators and dev teams would sign up for their platform in pricing tiers, but they're entering new markets. And I still like the optionality of the company. They've got this giant global networking mesh that encircles the globe, that they've pivoted into networking security, that they pivoted into a DevOps platform, and are starting to add more and more additional cloud-like capabilities like databases and messaging. So they have an extreme amount of optionality. They just need to learn how to sell from top down, in particular with that networking security that's really adopted, kind of enterprise-wide from the C-suite, not from bottom up. So they've kind of faltered on that front. So we'll have to see how they pivot and recover from that, but still really like the optionality of the company.
What exactly does Alteryx do? I mean, it's a company. I know the ticker AYX is just not a stock I've really followed or ever dove into. So maybe you can educate me.
They are a company that is extremely well positioned for this moment in AI.
Okay.
Unfortunately, the company execution over the past few years has really faltered, and I have a pretty negative view of the company.
Okay.
Alteryx got its start as a Windows-based suite of tools that a data scientist would use to manage their workflow as they worked with data, cleaned up and enriched data, pulled data from different sources, and then would build machine learning models and experiment, train, and ultimately deploy those models. So it's a kind of end-to-end data and AI, and what's called an ML ops platform, machine learning operations platform. So it's all the workflows around machine learning, building your own models, training and deploying them. So from that alone, you'd say this is an incredibly well-positioned company for this moment in time. Even with LLMs, that's a different model. You're not so much creating do-it-yourself models. You're just taking your data and using this already pre-built model to learn from your data. So, this rise of generative AI and LLMs is a different approach, but these ML ops platforms are adopting LLM use very easily. Because you still need to experiment, you still need to measure the effectiveness of this LLM. You could be weighing the results of one LLM's output to another. These AI engines are going to be swappable. And so a lot of services are coming about from a lot of independent software vendors. Let's say GitLab created a competitor to Copilot to do a code assistance AI. So it can generate code from you based on a natural language prompt. Write me some Python code to do A, B, and C, and it will write it for you. That can be built from a couple of different underlying LLM engines at this point. So these things are all going to be swappable. You need to measure them. Where Alteryx faltered is that for the longest time, they were term license-based Windows software. They were not a SaaS cloud subscription-based platform. And the original founder CEO was very hesitant to move into SaaS. And so they remained a Windows platform when the accounting rules changed with ASIC 606. You could see with the term licenses, that revenue is kind of all up front instead of being ratably recognized over the course of the subscription, like a SaaS service. And so they were still doing 75% growth at one point, but it was because of these term licenses were so front-loaded in revenue recognition. And so as soon as they kind of started to falter, were really the mindset of enterprises creating AI and ML models went to cloud services, not these window-based software, it left Alteryx behind. And so they've spent the past couple of years completely replacing top management. They started to create some SaaS services of their data science tools, ended up kind of scrapping that and buying a completely separate company called Trifecta at the beginning of last year, a little over a year ago now. And that has finally hit GA, I think, at the start of this year. And so they're just now kind of creating a cloud platform. And of course, all of these LLM engines, generative AI, they're entirely cloud-based. They learn from the public content on the cloud, and they're hosted out on the cloud because of the level of scale needed, the number of GPUs needed behind them as you train them and as you use them in production from there, called inference. So Alteryx was very late to the game in moving to the cloud. They had an extremely nice quarter last quarter, but it's very lumpy because of this license revenue. Now their new cloud platform is been released. And I think this company is kind of going to be eating itself a little bit as customers that were term license-based are going to move to their cloud subscription. And so I think this company has a little bit more turmoil ahead of it.
Okay.
And I'm a little hesitant to use them as an AI bet because it's frustrating. They're so well positioned for AI, this moment in AI. And I think they're just going through some executional issues still.
I know Databricks is one of the most anticipated IPOs.
Yes.
I've heard the valuation could be somewhere in the 30, 40, $50 billion range. Are they Snowflake 2.0 or Snowflake? I mean, are they Snowflake's equal, or is one platform better than the other?
They're an interesting use case or case study in that the long-term goal of Databricks and Snowflake's are aligned. They're both moving towards the same point on the horizon. Right now, they're very different companies. Databricks was an open source based enterprise company around Apache Spark, which really won the Hadoop battle in data analytics. And so they built an entire platform from that, really befriended all the other hyperscalers, and really became like Alteryx, an ML ops platform of choice of how you could use them to experiment with models. You could play with data in Spark. It's kind of a data exploration tool, as well as then you create models from it and can deploy and track those models from there. Where they have pivoted lately is moving directly towards Snowflake. They have adopted a data lake format called Delta Lake that really turns object storage in the clouds, which is really base, almost file storage, and it's turned it into a database. It's a layer that sits over kind of these raw files and can turn any raw file into a database. So they're moving straight at Snowflake at this point and really are aiming to become the top platform of destination for both data and AI from here. So both data and analytics, which I'd consider the BI side of things, business intelligence and data warehousing needs, but also the data science needs around AI and ML. So they're striving to move into all those directions. Snowflake went the opposite direction. It started as a cloud native data warehouse and is moving towards the AI ML use cases. So they're really aligning down the way. It came out, I want to say in April, Bloomberg had an article that Databricks is around a 60 billion
Valuation?
Sorry. No, I've got my numbers wrong. Is around I didn't have the valuation. It had a 1 billion run rate.
Run rate, okay.
But their lakehouse portion of that hit 100 billion. Whereas Snowflake around the same time was around a 200 billion run rate, growing. That's what it is. They were growing 70%. Snowflake was 2 billion, growing 70%. Databricks was 1 billion, growing 60%.
Okay.
That's where the 60% came in. Just to give you a comparison of those two companies. However, the part of Databricks that really directly competes with Snowflake is 100 million at this point. So it's very much in its infancy, but it's absolutely a long-term threat to Snowflake. They just had their annual customer conferences on the same week. Snowflake moved its customer conference a couple of weeks to directly overlay Databricks. So they are throwing elbows right now.
Oh, geez. Okay.
And had very somewhat similar announcements.
So they definitely hate each other.
They are not friends. But I'm greatly looking forward to Databricks going public. And I wish it had done so back in 2001.
Do you think you'll own both companies?
I do. I think there's opportunity for both here. Absolutely, they're both aligning around this data lakehouse concept. It's a singular platform for all your data, whether it's your raw data in a data lake or your business organized data in a data warehouse. It can serve over both of those things as kind of the query and compute engine. So they're aligning on that front. But they're very different approaches. Right now, Databricks is a collection of open source tools, a little bit piecemeal that you have to put together yourself, but they're starting to create new serverless platforms in individual parts of that. Right now, they've got two parts of it. The SQL engine that BI tools can talk to, like Tableau and Looker and Power BI. They've got a serverless engine that can sit over their data lakehouse and provide data for those dashboards and kind of ad hoc data exploration tools. But also model serving. They've created a serverless capability built atop GPUs that can serve up AI engines and ML engines for you. And you can measure the usage of it in a serverless capability. So it will grow and expand as needed elastically, which is fantastic because you never know how, the adoption of some of these AI models is going to happen. So they're starting to create more and more serverless capabilities, but right now they're mostly a piecemeal collection of open source tools. Snowflake, on the other hand, is a very turnkey single platform that's very easy to use and actually has very few bells and whistles that you can adjust. The bottom line, Databricks is a collection of kind of open source tools with a couple of serverless capabilities. Snowflake is a completely turnkey solution that's proprietary, starting to work with some open formats, but it really wants to be the centralized location of all your data is put into their platform.
So last couple of companies, I have no idea if you cover them or not. I don't think I've ever seen you talk about them, but one company that certainly is hyped up on FinTwit. I don't think the valuation makes that much sense right now, but maybe they're doing something I don't fully understand, and that's Palantir. Do you follow Palantir at all?
Incidentally, I've certainly looked at them. They are a BI and AI platform, so they kind of go both ways, like Snowflake and Databricks we were just discussing. But I find them a very white glove service in that they sell really heavily into the government. They do have some strong numbers in US commercial growth, but outside of the US, globally, the numbers are pretty abysmal. So, very successful in the US, but I don't see that sense of scale that I like to see in these other platforms that can grow globally. Apps are being created everywhere. AI is going to be in use everywhere, not just in the US. So, and they're very white glove.
On that point, are a lot of the cloud companies that you like, Cloudflare, Snowflake, Zscaler, Datadog, are they all international? I mean, do they all have a strong international presence?
Yes. So I guess there's a criteria I like to see. Thank you for elucidating that. That's part of why I've been hesitant to get that excited about Palantir. It's the white glove nature of it, in that they really are adopting kind of highly regulated industries that are very slow moving. And so they have to work with these customers very closely to maximize the value of their platform. So there's a very hands-on component to them, and C3 AI is another company I find like this.
I was just going to ask you about C3 AI because, I mean, that's not a company I follow too closely, but I've looked at it. I mean, the valuation to me is crazy.
They're being driven with the AI craze going on this year, but neither of these are specialized in generative AI, to my knowledge. And so, like I said, generative AI is really allowing companies to dumb down who can actually make use of AIs. These platforms are being created around LLMs that you can just pull your enterprise data in, and it will securely keep it to the side, but enrich the AI with it. It's called the fine-tuning process. You can enrich these AIs further with this kind of proprietary data that you provide. Nothing about Palantir and C3 really hits or leverages that in particular. They're just like Alteryx, like Databricks, have always been focused on that do-it-yourself model of creating AI models. And so I don't see them as particularly interesting right now. And then, of course, the valuation, just having a ticker of AI is going to rocket you 100% alone on that.
To me, that's the problem with both companies. I mean, I think investors are flocking to them, thinking there's this big AI component to their business, and I just don't see it. So I'm glad you agree.
I think there's a lot of excitement here, but I'm very reluctant or hesitant to invest solely in AI as an investment theme because I feel it's so defensive for companies. Every company has to do it. Absolutely, demand is skyrocketing. NVDA can't make H100s fast enough right now. The clouds are exploding. All the infrastructure layers are exploding, but every company has to make use of it defensively at this point. You have to adopt AI in your product, or you're really being left behind by your competitors because your competitors are adding it.
Is there a big CapEx cycle coming for the AWSs, the Azures, the Google Clouds? Do they have to spend a lot of money to upgrade their servers?
No, they've all been prepping for this moment.
Okay.
This has been visible for a long while. All of them have AI ML platforms around creating these models yourself. Some of them were caught a little more flat-footed than others with this rise of LLM with OpenAI. Certainly, Microsoft has been a major backer of OpenAI and a major strategic partner of them. So Amazon was maybe the last one to really catch up with that. So, but that's, I like to have some reluctancy here because the valuations have exploded too quickly. It's just kind of shades of November 2021 for me a little bit.
And now we go into Q2 earnings with some of these stocks up 50 to 100% from when they reported Q1 earnings. And that always makes me a little bit nervous.
Yeah, big time. Because certainly there's demand, but this is a feeling out by a lot of companies to figure out what their strategy is. And, I don't think you're seeing an immediate impact yet in something like Snowflake, let's say. I think it's incredibly well positioned as a central repository of data, but are you going to see the AI impacts immediately? No. And in fact, their last numbers were incredibly disappointing because of just the general pullback with the macro situation.
Right.
So there's the fun balance right now is our companies, and I think we're going to see this in Cloud Week, how much are companies still optimizing cloud spend, being reluctant to land new deals, being reluctant to commit to longer term contracts? Is that continuing, or is AI tailwinds kind of blowing past those immediate headwinds that still haven't abated? So which one's going to win the battle here over the next quarter is and
that's why I think Q2 earnings is important, but the numbers may not be as important as the commentary from management or even guidance, I suppose, and how many times they mention the word AI
exactly
on the conference call.
Mention it 80 times and you'll see a 5% boost just right there.
Well, Muji, thank you so much. Once again, really glad you got a chance to join today. Glad we finally got a chance to do this. And anything else you want to say before we wrap up? I mean, I'll put your website in the show notes so people can follow you on your website. Are you doing paid subscriptions yet?
Yeah, I've got a premium service. So I sit and obsess about these things on a weekly basis. I had a really big series on AI and ML, how it's evolved, really what's behind this drive, how companies are going to adapt to it and what industries can see a boost from it. So I have been covering this as a subject. Again, kind of reluctant to really go all in on any of these names because of this kind of defensiveness that's I foresee with AI. But yeah, just if you want to learn more about data and analytics and machine learning and AI, come on and sign up for premium.
Awesome. Thank you, Muji. I'll talk to you soon.
Thanks, Jonah.
Have a good one.